Do you know what the most common misconception is that I hear around life insurance? It's when people have a work policy for their life insurance and they think that that is enough to guarantee and protect their family. Well, I'm here to tell you, you're simply wrong. What's going on, everybody? My name is Kyle Demian with the Wealth Academy, and a life insurance policy through your work may not be all that it's cracked up to be. Number one, your life insurance policy almost 98% of the time works just like it does if you have like a work truck or a work phone, for example. And what I mean by that is you get that work truck, you get to drive the work truck or have the work phone while you work there. However, if you quit, leave, or retire, you no longer work there, the work truck and the work phone stay with your employer. And usually so does that life insurance policy. The problem with that is many different things, but one of the number one things is, what if something was to happen to you and you have a heart attack, stroke, cancer, some type of major health related event that is not your fault, and you are no longer able to work? You're no longer able to work for that company and you have to leave, you have to retire. Maybe you end up going on to disability. Right then and there, you lose your life insurance, right? You lose the ability to get life insurance too. Any major health event like that, a life insurance company is not going to take you on. That'd just be too much risk, right? So having your own standalone life insurance policy that you own and control is always going to be the best way to remove this risk for you and your family. Now, let's say maybe you don't get sick. You don't have something happen while you're working there, which is a great risk. Let's say maybe you retire from the company. You're 67. You go on a retirement leave. Unless you're a high-level executive, maybe CEO, 95% of those policies don't transfer even when you retire. I can't tell you how many times I've had conversations with people that had this group work life insurance policy. And yes, while you're part of the group, you have the life insurance coverage. As soon as you step away from the group, like you retire, most of the times you don't get to take it with you. And so if you're 67, you don't get to take this life insurance policy with you. You could have had this policy that you paid into for years or decades, and now you no longer have. You spent all this money into it for nothing. And once again, you go into retirement not having any life insurance. And then the last reason and the last benefit, number 3 here, actually kind of ties back into the first one. What if you have any major, illness like a heart attack, stroke, cancer? And the last benefit is that when you have a standalone policy that you own and control, especially with one of the modern day life insurance companies that are out there, some of these policies have living benefits on them called chronic, critical, and or terminal illness riders. These riders allow you to access the death benefit while you're still alive to pay for anything. And here's what I mean. Let's say you have a $250,000 death benefit and you have a life insurance policy with a critical illness rider on it. This critical illness rider testifies and states that if you have a heart attack, stroke, or cancer, you can access the death benefit while you're still alive, and you can use it for whatever you need. This is very powerful for people that own mortgages and or are concerned with what the costs could be for healthcare to come up if there was a heart attack, stroke, or cancer. Okay. And so with this $250,000 death benefit, the life insurance company already knows, they already have it on their balance sheet that they owe your family a $250,000 death benefit at some point in time when you pass away. So they don't mind giving you access to your money, to your death benefit, if you're still alive in the event of one of these major illnesses. This is how it can be so strong and powerful, right? If something did happen, maybe they don't give you access to the full 250,000, but what if you could have access to 100,000 of it to help you pay your medical bills, to help you keep up with your mortgage, maybe to help you replace your income for a short period of time, depending on whether or not your workplace offers, a short-term disability income. If they do or they don't, once again, you have options because this life insurance policy was properly set up and structured to give you these options and these benefits should you need it. So don't rely upon just your work insurance alone to be able to protect you and your family. If you want to have a conversation to review your options to see what would be the best fit for you, feel free to click the link below. It'll be listed in the description. It'll be thewealthacademy.com, and that's Academy with a K. And this will be a way for us to chat one-on-one to see if it makes sense for you to get and take out your own life insurance policy. If you found this video helpful, make sure to like it and share it with a friend that only has a work life insurance policy and should reconsider their options as well. You guys take care. See you on the next one.